Hello and good evening. I'm Giuseppe Basile. I'm the analyst and trader you can find at the website www.fibstalker.com. I also post regularly on Twitter using the Fibstalker nickname. Good evening. Today is Sunday, November the 23rd, 2014, and it's 10 p.m. time in Toronto, GMT minus 5. The market are opened, and specifically the forex market and the futures market. And in this video, I'm going to review for you the 12 market I follow, plus I'll add a few other markets that some of the followers have requested. So let's start from the euro dollar, and you will remember that 2 weeks ago now, Thursday the 13th, I actually was looking for a retrace in this euro. What you see on the screen here is the daily time frame, and this market offered a beautiful setup here a few days ago, actually now a few weeks ago, and it went into the first target and second target as well, as you can see here. And then the sequence of measured move break, and that's the reason why we saw this market moving higher. Now I was looking for a full retracement into the all the way halfway back here from highs to lows, and that was 126.20, but this market actually stopped at around 126, and this movement was mainly due to news here. And this market actually was after the fact is now being controlled on the daily time frame by this trace here. As you can see, there was participation here. Of course, initially this participation lower from 126 was driven by the smaller time frame, and those who follow me know that I modeled this market using the behavior of modeling the behavior of algorithms, powerful classes of algorithms on modern markets. And we all know that this market is going to eventually move into 121 2040 level, and that's the level of large participation here, where we see also this potential start of variable participation from longs. Just to put things in perspective here, I want to show you where we are in the euro dollar here. It's not say that this market will just continue lower. We have this potential area of participation here. So now the current daily time frame is pushing price into first target 122.46, and the current setup is going to help price into potentially even lower level 120.62. However, if you're short in this market, you should really get out at 121.25.30 level. Now if we go back very quickly on the daily time, I want to show you something different here. There is another bull potential trade here, and you can look at that, and that's from this level here to lows. If price retraces into that 124.32, that's going to be another short there. Okay, and again, it's another short that helps rise into these important levels of target here. So these trades would actually help us price into 122.40 and for a continuation lower. Make no mistake, this market will reach 121.20 eventually. Move to the SP 500. This market is continues moving on the upside. There was no opportunity for retracement here, so this market is just continuing in extension, and I showed the sequence of extensions to my student in the coaching program. If you are interested, just drop me an email, write down more info, hit reply to this newsletter, and write down more info, and I'll be happy to provide additional information. What we're going to see in this market is this market moving higher into 21. My long-term view for this market is 2500, and that's where we should then see profit taking at the second target of a large extension here, and the lows in 2009 were participated, and the second target of that time frame is 2500. So that's where I'm looking for this market. Moving next, dollar index. The dollar index initially had a reaction to this 86.80, but it's continuing higher, and so now there is the potential for this market to break also the 89.19, in which case we could see much lower much higher price in this index, which would mean much lower prices for the euro. And one of these level is 104. There's a 100 level as well there, and that's where we could see this market. Gold, very important development this week. We are on top on the weekly time frame of this 1232 level, and now we also have a break of a sequence of measure move. Let me show that to you. That has a very important meaning because it means that the participation that this market has seen so far from that area potential support was able to break the sequence, this pressure downside in gold. And we had this measure move, the 1252, which I called, and brought price into this 1146. Now the next measure move in this large time frame was traced from this high here to lows, and that has broken last Friday, as you can see. Just few ticks, but that's enough. So if this market now comes back into the all the way halfway back, that becomes a very good opportunity for picking up this market into a higher level. And the higher level that we could see in this market, and it's very much probable at this stage, it could be from this high to the low. So this the swing all the way halfway back, and as you can see, if the market gets into this 1169, you know very well that I never trade the market blindly. I look for a confirmation of participation at these levels from program trading, and at the same time I need to see the failure of the sequence of measure move lower into this level. When that happens, that's an indication of participation, the participation alongside winning on the participation on the downside. And I have a technique which is a proprietary technique I called fib stalking, which allows me to procedurally test these levels like this. And if you want to learn more about that procedure, I don't hold back on anything in my coaching program. So you just show up, you just subscribe and roll, and you will get to know what I do and the way I do it, exactly how I do it. So as you can see here, this potential level of support here is a first target into that 1227, and a second target right at that potential area of resistance starting at 1216, where we will and we could see, no we will because we don't know, but we could see the price moving into. Next, US dollar versus Japanese yen, very interesting market. Those who follow me know that I've been timing this market, and at the beginning of August I mentioned these two targets, 108 and 1580, and as you can see, in only 50 days we got into the first target, and then after 4 weeks we got into the second target. So some people might be puzzled by this market now, saying why this market is continuing higher after we hit the second target. Well, this market is being pushed higher by the algorithms on the smaller time frame, but this market will need to correct, and there are two potential level of support. The first one is a daily, it's not that strong from this level too high, and if we get there and the market actually gets participation there, we could see even higher price here. But eventually this market will need to, if we want to continue higher, will need to come and test an important level, which is at the moment from highs to highs, is this 11 111.31 level, and that's where we eventually are going to see this market. How this is going to play, we don't know, but we know that if market gets into the level, I'm going to use the Phipps token timing technique to time it again into higher level. 122.52 would be one of these, the first of these levels, potential targets. Moving to the euro versus Japanese yen, this market has been subjected to the same weakness of the euro after the comments, Draghi comments, but this market did not get into that 149.86. This is a busted setup. We know that the market can get there, and only after that we see um, we typically see a sell off. The point is that unfortunately the euro is being governed by news in the last few months, and that will come to an end eventually. But for now, we need to try to do our best to time and understand what are the anchors that the algorithms are using now. As you can see, some of those anchors can be anticipated, and they also give very good trades. Just keep applying the method here. And the pound versus Japanese yen, something very similar here. We didn't get just yet into that 186.40, but when the market reacted to this level, and again I used the Phipps token timing technique to time this 168.81. Look at where the market went, 168.70 to 186.40. So talking about a considerable number of pips here, and that's the kind of trade that you should take as well. Swing trades, that's where the money is. Okay, the euro versus the Canadian dollar had a sequence of measure move lower here. Eventually that sequence failed, as I showed you since a few weeks. You can go there and review my other videos. And at some point, this 146.64 pierced on the upside, and that was the end of the sequence of measure move, moving lower here. But eventually, the market continued here and actually came to trade an ambush trade here from this high to the low, and that's what we are looking at for this market at the moment. So you reach the first target, that's the potential to get into the second target. Now remember that in May, end of May, I mentioned 138.50 level. Now, when I saw the break here, I thought that the market would actually correct before getting into the level. But the weakness in the euro and in the news, it's actually pushing this price right into that 138.50. And this is a very large and important level here, also from a weekly point of view. So typically in these large levels, we see participation of program trading, and this in this case will be on the upside. And we will time this based on how the market behaves here. So if he gets into this level, we will time this as an extension. Otherwise, I'm going to use this high to whatever lows he prints in order to establish a violation of the sequence of measure move here. So at the moment, this market is controlled on the daily time frame by shorts, but it's actually approaching a very important level, an area where there is potential participation from the on the upside. Remember that this is always potential participation. The market can do anything, and that's why I use the Phipps token timing technique in order to test when there is that participation from the downside. The next market would be pound versus US dollar. Someone asked for this as well. This market is being controlled by shorts as well. Last week I gave one of the potential support that was broken. It was this one. But in this market we have to look back to the lows in 2009, and when we look at that, we know that our potential area of support is somewhere else. It's actually at this 152.77. In fact, when we trace from lows to highs here, from lows in 134 um, 134.98 here to highs here, we see that that level comes at 153.49, and that's where we would wait for this market to get into before this market can get higher. And on this weekly time frame, we can see a measured move that actually worked, was participated by the market. Price was brought into the first target, but not just yet into the second target, and this market will eventually make it there. Now, when we look at the daily time frame, we can model this market also in a different way, and the confirmation comes from the exact participation, even if that is identified after the fact. When you see this kind of participation, the first time price discovery, sorry, the first time was here. The second time, that becomes something very, very relevant, and you can start trading it. And this would have given a free risk trade. A free risk trade is the concept I use all the time to actually reduce risk. Trading is a game you win in defense. If you're able to manage your risk, your winners will take care of themselves. And when 161.85 actually was participated, it was capable of bringing price into the first target. There was a little bit of profit taking here, and eventually second target. So there is, on the daily time frame, the potential for this market before continuing lower to retrace into the all the way halfway back here. It's not that far, it's just 157.73, and that would actually keep pushing this price into that important level of support there. So and that would be, as you can see, that lines up also with the second target of this extension, long short here. So it's very likely for this market to go and retest this 156.73. Once it's there, again, we use the fib stalking timing technique to time that and get very good reward to risk. In this case, you could get, in this trade, you could get 7-10 reward to risk. Okay, timing on the 15 minutes, even more. So moving next, Australian dollar versus the US dollar. That's that's an important. This price is it's at an important level of support. How do we identify this level of support? Very, very simple. The full range 50% retrace, and look at how beautifully and precisely this level trade 085.39. The market then came back a little bit but did not stop out, because the stop would be at this low. Because when the sequence of measure move fails into this level, that's the way we trade, and typically the market does not challenge these lows as anymore when the participation on the short side is completed. So where this market can go, as we mentioned also last week, this market can go, the first level would be this a test of the 090.22. Okay, and you can see on the daily this market actually bouncing, and once the sequence of measure move fails here on these top big levels, that's where you want to get involved in the market. And if the market comes back to you without stopping you, first of all, here this market gives a free risk trade, so we have half of the position here, and when it comes back you can add another half of the position, and a free risk trade was given already. If you want the details, you can subscribe my coaching program. I don't hold on anything, and I give all the information, and you will be able to identify this level and trade exactly how I do if you take the course. Moving to the US dollar versus Canadian dollar, this is a beauty of a market, and those who follow me know that I've been looking at this start of area of resistance here, starting at 112.50 for months, and actually this actually worked nicely, and then the price was pushed lower to break the sequence of measure move, and that was an indication that this market was done on the upside. Now what happens is that algorithms on the smaller time frame went to push this price into this first target, and you can see it very clearly, the kind of participation that was initially at these levels, able to push price lower. And then the market went higher again, and within this area was pushed again lower, one time, two times, three times. And and now we know that we have the potential for this market to or it's respecting this larger area of resistance. So there's now the potential for this market to go to one back to 110. And those who follow me took this trade as well, very nice and very clean as well. It could be timed on the 15 minutes. 113.63, which brought price into the first target. And that's where that this is the kind of moves that you want to be into. And of course, at this stage, you want to sell your position here. Maybe you would only exit a little bit of it. And of course, there is a free risk trade for this trade, and we want to bring this trade down into the 110.43. That's the level where I see the price moving at the very beginning before we get a potential reaction higher here. New Zealand dollar versus US dollar, very similar situation as the Australian dollar versus US dollar. The only difference here is that this is a second test, and we know that second tests are important tests. And as you can see, it was tested once, gave a free trade, came back, stopped us out at break even, and then gave another entry, which has now a free trade. And on the daily, we got already a second entry as well. Very clean, very nice. And that's the kind of trades we are looking at, we are looking for. This is from highs to highs here, participation at that 0.7817 for this trade given. First target is above for this trade, and you can take a little bitty off here if it gets into 0.80 50 45, because we want to bring this price into at least all the way halfway back, and that could happen without problems. And the real target for this win trade is even much higher. I'm just considering this as the first target because of the selling that we saw here. But as you can see, you could add here, so you could enter here, stopped out at break even, then add here, finish trade, add here, finish trade, and now we are looking for 080, 49, and eventually higher into this 082, 53. Well, that's where we see the market. If the market comes back on us, no damage at the moment. Break even if we get below this level, and break even if we get below this level. So if you respect the market and you actually uh, take strive to take Phillies trades and respect the market, and when you are not right, or actually when the algorithms are not modeling price correctly, you just exit at break even. When the algorithms model price correctly, you'll make great reward to risks here. And this trade is going to be 10 only for this trade, and 10 to 15 only for the other trade here. So that's the kind of trades that that I get a FIB Stalker trading here. Now let me continue with four more pairs for you very quickly. The first one is the pound versus New Zealand dollar. The whole New Zealand dollar and Australian currency are actually weak compared to the euro, even to the euro. And as you can see here, this market is now trading since Thursday. Is trading this measure move from lows to lows that I showed you in advance, and this could be timed and gave a fairly trade here. Where this market is going? Well, this market is gonna test again. It's going to test this ambush trade from lows to highs here, and this as you can see, the first target lines up nicely. So this is a 7 reward to this trade here, which is very well worth taking. And I gave this level in advance on Wednesday, if I remember well, and you can double check that in your newsletter as well. And the next would be US dollars Swiss franc here, which actually is trading this extension long, which we also identified in advance. 093 with a target at 098, 098, so talking about 470 pips here, which is quite a good trade. and this is almost 20 reward to risk here, timed on the 15 minutes. But this market gave us actually a gift, because he came to trade all the way into this 095.49, and as you can see, the first target lines up with the first target of this larger time frame here. So this could be timed for this trade again, and now you would have um, two risk-free trade here, which actually have an overall reward to risk of 25-30 here, although only half of the position for each because of the free risk trade. So this is the kind of trades you are looking for in a couple of months. Making 30 reward to risk, it's not too bad, only on one pair. So that's the kind of results I'm looking for. The euro versus the New Zealand dollar is following a similar move like the pound versus New Zealand dollar. So the difference is that here we had a traditional trading, and this could be anticipated as well and timed as well. The 160, 40, 50 here was never pierced on the upside, and again, this market has the potential to move into 155.42. Finally, I want to close with the pound versus the Australian dollar this time, and as you can see, this pattern are recurring here, and there is again participation on the short side from this high to lows, and this was known in advance, 3 days in advance. You could time it, price next into a retest of the previous low. The previous low was actually a reaction, actually showed a reaction here, although non neatly here, from this 179. Price actually pierced into it. So this level is going to be retested again. We will know whether this price will keep moving laterally or will just break this 177 to go and test the next level of support. So if you are interested in these patterns, and as you can see, the reward to risk that they offer very high, and if you are interested in learning the Fib stalking timing technique, which is a proprietary procedural technique, procedural, never heard before in trading so far, a procedural mechanism that follows the algorithms, and when the counter trend move fails, gives you all the steps to identify when that fails, and when that happens you can actually trade it, and actually it can help you with great reward to risk here. As you can see, this is a pin bar, but we don't wait the pin bar, we wait for the violation of the sequence of measure move, and this gives you possibilities to enter this market with much higher reward to risk with a confirmation. So that's what I try to achieve at Fibstalker trading. If you are interested, drop me an email. Just reply to this newsletter with the words more info, and I'm going to provide you more information on the Fibstalker Methods coaching program. Thank you very much for your attention, and I wish you a great trading week, and I'll see you for the midweek review. Thank you very much, and have a great trading week. Bye bye.